From the University of Westminster, this is The Week Ahead with Dave Coker.
Hello guys, it's Sunday, March 7th. This is, of course, The Week Ahead. My name is Dave Coker. Let's see what's going on in the markets over the next few days. Try to help you understand what news might drive changes. So key events that we got to be aware of. First of all, we've got Mr. Biden's stimulus package passed. $1.9 trillion. It's going back to a symbolic vote in the House on Tuesday, I believe, and he's hoping to sign it by March 14th. So we've seen bond yields reacting in anticipation of additional spending. So we'll have to pay attention to this over the next week. It should pass through. Shouldn't be any issues there. We've got a lot of inflation data coming out. We'll outline some of it in the daily detail. And again, we saw evidence of inflation with economic news that was released last week. So inflation is definitely starting to rear its ugly head in the States. Pay attention to it. We saw a tech pullback over the past week. Actually, since February 8th, there's been a sharp drop in tech across the board. Not really across the board, but sporadically and then across the board over the past week. We'll have to pay attention to this, guys. There is evidence that the tech trade may be over and we're moving into cyclicals. So pay attention to it. See what happens over the next week. ECB meeting coming up Thursday. And once again, guys, we're going to see what's happening in the Eurozone. Of course, they're struggling with their vaccination rollout. It's not going too well compared to the US or the UK. And we'll have to see how they handle that. And then finally, on Friday, UK GDP data is coming out. And this is extremely important, guys, that we have to pay attention to it because it'll give us an idea, in concert with the budget that we received in the UK last week, what we can expect over the next quarter or so in the UK. All right, let's get into the daily stuff. So sorry, we're going to look at the markets a little bit further. All right, on March 5th is when I burned this off. This is off the wonderful FinViz, of course. And what we're doing is we're looking at the S&P 500, and we're looking over the past week. And once again, guys, the way you read it is bright green, bright red. Bright green means high change. Bright red means a relatively high loss. We're ranging from -6 to +6 this week. And you can see, guys, my gosh, Tesla got pounded on in a major way, down some 11.48%, really getting hit. There's a lot of competition coming out now. Every car manufacturer has an electric vehicle offering now. So people are starting to question, can Tesla still gain market share? Or will other entities start to take it away? I've said for quite a while, once Porsche and Mercedes start to make electric cars, you're going to see certain parts of the market move away from, certain parts of the consumer base, move away from Tesla to these prestige cars, a Mercedes, a Porsche, other manufacturers like that. You can see down here over the past week, one thing that's been really interesting, lower left-hand corner, diversified banks. And I've mentioned before that banks are a good buy at this part of the economic cycle. JP Morgan up some 2.54%. You can see Bank of America up about 6.5% over the horizon. Wells Fargo doing quite well, and Citibank. All of these banks doing really, really well. Good opportunity to put some money in there. An interesting thing is when you look at healthcare right in the middle, I was really sort of surprised to see this, that we're not really performing well. Johnson & Johnson down about 1.5%. We can see Abbott, AbbVie, down about 1%. Pfizer actually up about 2.7%. Not doing too badly over there. But in general, you can see most of these stocks are sort of treading water or really not performing that well at all. We're looking here on this next chart, this next heat map from FinViz. We're looking at earnings per share growth over the past year. And again, this goes from -50, dark red, to +60, bright green. And let's take a look at Amazon. Amazon is up some 101% in terms of EPS growth over the past year. Stunning growth from Amazon. Can they continue? It's not clear, but we'll have to see what happens. Microsoft, 31.30. And again, guys, on the whole, you can see the greater majority of stocks, it appears visually, I don't have the quantitative data, they appear to have done well over the past year. In spite of what we saw with pandemic and shutdowns, stocks have actually done fairly well. EPS growth, and specifically, has done well over the past year. Let's get into the daily. So Monday, March 8th at 1000 hours, we got the Consumer Board, the Conference Board, Employment Trends Index for February. Prior came in at 99.2. We're not totally sure what's coming up there, so pay attention to it. I also got a chart down here showing 3-month and 6-month T-bill yields. And we're going back 5 years. And you can see basically in 2018, they topped out at close to 3%. Now they're trading at 3-month and 6-month. Prior was 40 basis points and 60 basis points, respectively. So they've been chewed up. We'll have to see where this goes. This is absurdly low, even though we've seen a recent rebound. Absurdly low levels in the risk-free rate. On Tuesday, March 9th, we've got at 0700 hours, we've got the EIA short-term energy outlook. And what we're doing there is we're taking a look at the U.S. Energy Information Administration outlook for energy going forward. Grab a copy of it, easily download, and read through it. We'll see how they suspect the energy market may emerge over the next 90 days, or may evolve, I should say, over the next 90 days. And at 1000 hours, we've got the United States Department of Agriculture. It's the USDA, WASD. It's a real mouthful, isn't it? So we got the USDA World Agricultural Supply and Demand Estimates Report. This is really insightful research that impacts agricultural commodities. So I'd suggest you grab a copy of it and just sort of see what's happening there. On Wednesday, March 10th at 0830 hours, we've got US CPI month-on-month for February coming in. Prior was 0.3%. We're forecast to come in at 0.4%. This is a 1-month change, guys. At 1030 hours, we got crude oil inventories. Prior was 21.563 million barrels. We don't have a forecast for this. Thursday, March 11th at 030 hours, initial jobless claims. Prior was 745,000. New people filed their first claim for unemployment. It's forecast to come in slightly lower at 725. I think given the performance last week of the job market, we might be doing pretty well here. We'll have to see. At 1000 hours, we've got the JOLTS, the Job Opening Labor and Turnover Survey, the job opening component for January. And prior, we saw 6.656 million jobs created. Forecast to come in a little bit lower, 6.45 million, but still, it's very, very impressive if they can pull that off. On Friday, March 12th, we got PPI, Producer Price Index, month-on-month for February. Really got hit hard last month. Prior was 1.3% increase in producer prices. Forecast to come in at 0.4%. At 1000 hours, Michigan consumer expectations. And once again, we're talking to consumers. We're doing a survey of roughly 500 consumers by the University of Michigan, trying to get an idea what they suspect will go on with the economy. And it's actually, the forecast is very bullish, 74. Prior was 70.7, I'm sorry. And really what this indicates is that consumers think things are starting to look up. And there's been anecdotal news on this as well, that people are starting to believe the worst is over in the States for COVID. Hey, spring is coming. Vaccinations are rolling. Hard to see how it could get any worse. All right, guys, this has been the week ahead for March 7th, 2021. Keep an eye on the news that impacts the assets you tend to hold. This is all focused on what I like to look at. Come up with your own indicators, guys. Try to baseline on what I've got and replace some of the news items I pick and add your own. Once again, when you start to get a feel for the news that impacts the assets you buy or you hold, then you can start to make money in the markets at a much higher level because you're anticipating the news, you're anticipating price changes, you're anticipating volatility, and you can structure your portfolios accordingly. Have a safe and profitable week. I hope you all make buckets of money. Take care.